Well, PB Fintech, that is the parent company of Policy Bazaar, has been in focus. The stock is up over 10% in trade. Now, even volumes, if you see, are nearly 3 times its 20-day average. Now, since listing, however, the picture has not been that great. If you see, compared to the listing price, the stock is down nearly 22%. And if you compare the prices, current market price from the high price, it's down nearly 48%. So, what led to this fall in the prices? Firstly, it was because the promoter sold its stake in February in the company to pay taxes, which was a dampener on investor sentiment. Also, a large insurer, HDFC Ergo, delisted from the web aggregators, which has been a consistent concern over these companies. Along with this, if you see, the marketing spends of the company has been on a rise, while the ESOP expenses have been elevated and is expected to remain elevated going forward because of the new ESOP policy. Now, because of these reasons, the profitability of the company is also expected to be delayed further going forward. However, given the sharp fall in the share prices, now brokerages believe that most of these negatives have been priced in. And if you see the risk reward ratio, it is much more favorable for Policy Bazaar. Even for the for 9-month FY22, if you see, the company has grown at around 44%, while the industry has grown at around 22%. And the street is ignoring this fact that the business momentum is very strong when it comes to Policy Bazaar. Also, its recent partnership with LIC is expected to be a game changer and support its earnings going forward further. Also, going forward, if you see, the earnings are expected to be boosted on the back of the earnings coming in from the life insurance renewable premiums. Now, because of these factors, brokerages expect the company to achieve profitability by the end of financial year 2025. Now, also, one of the reasons why the risk reward is much more favorable when it comes to Policy Bazaar is because these ESOP expenses, which are expected to remain elevated going forward, are non-cash expense and notional, and thus they do not impact the valuations, and hence the brokerages continue to remain positive on Policy Bazaar. That is PB Fintech.